if you can imagine, if you were a trader looking to trade against this upward trend on this Euro USD. Now, this is a daily time frame, and all this time you've been looking at a reversal to the downside. You did have some pretty tough times, even if you like took your stop loss off and you just left your trade open. I mean, we went into some pretty hectic drawdown. 1,200 pips is nothing to play with, and this is over a space of about a year, probably 2 years, closer to 2 years. The market developed and actually did this sort of movement. Right now, if you had been trading in line with the trend, right, as I'll show you guys how to just identify the basics of what a trend should look like, then immediately from the outset, you would have been able to catch the major move. Now, the trend is one thing that you need to understand regarding following the trend, right? What you're trying to do, it's very difficult for you to catch every single pip out of the market. I know a lot of people try and make it seem like they can squeeze every pip or half a pip or pipette out of the market, but it's very difficult for you to actually do that, right? Because essentially the people who do have much more money than the normal retail trader, people who have much more in terms of experience and resources than the average retail trader will have will have rather the advantage, and therefore they will be able to dictate where price will actually move, especially in the short term. Right, it's a bit more of a challenge when it comes to long term, but when it comes to short term price action, short-term price action is very, very manipulated, and it can lead a lot of people into a lot of frustration. So in any case, the major trend will still remain intact despite that regular day-to-day market manipulation. So if we're just looking at the Euro USD, okay, for the past couple of months, like from March 2018, I believe, okay, March 2018, okay, we saw, let's just identify this high, right? So that is a swing high, right? So when you're looking at market, what you're trying to really get back to is those swing highs as well as those swing lows, right? Because those will give you the details of where the market is generally headed towards, right? So whether we're talking short term or long term price action, you have to be looking for those swing lows and swing highs. Now, one very simple way for you, or a very simple trick that you can use to identify where the major market trend is just by looking at the moving averages. And so if you're looking at those moving averages, it can actually really give you a good idea of where the market can continue towards. Now, I know a lot of people will be against me saying that trading reversals is very difficult to execute. Right? Trying to trade against where the market trend is, right, or where the big money is, because this is where the big money is going. Right? So big money, it's clear that smart money, people with much more influence than the regular retail trader, have been drawing the market towards this direction. Right? That's pretty evident in the decline that's been occurring. So it's very difficult for us to get any significant pips in the market if all we're trying to do is buy, right? Now, here is one very, very, very critical retail trader mistake a lot of people will make, especially in the beginning stages, is that they'll look at a market, okay, let's say on the 30-minute time frame, right? Okay, they look at a market on the 30-minute time frame, and on the 30-minute time frame, or the 1 hour time frame rather, they will be like, okay, the market has been rising for so long. This basically means that it should be going down. Right? Now, once you start thinking like that, you're thinking like average retail trader, and average retail trader obviously doesn't make any extraordinary type of returns, or any returns for that matter. So if you have sort of like this small way of looking at the markets, because once you start to zoom out, right, this is zoomed in. Let's just take a downward trend. for example, right? So if you're looking at this on the 1 hour time frame, you can see this drop to the downside. This will basically look like a downward trend to you, right? And if you're looking at this on the H1 time frame, okay, this looks like a upward trend, right? But if you head on to your daily time frame, then you get like the really good idea of where the market is generally going. Now, if you were to look at this chart right now, okay, now we're looking at, we have this decline that came in, right? And the market has been in a bit of a sideways consolidation before it actually drops, right? So it moves sideways a bit, right? Spikes up and then continues to the downside. And the average retail trader eye, or the average trading eye, will start to see this and be like, okay, the market has been in a decline for the past year. Okay, let's just say 1 full year, 12 months, and it should, quote unquote, be going up, right? However, if you move then through to your weekly time frame, you'll see another picture, right? Right. So if you move through to your weekly time frame, you can see very clearly that there's still a lot of room for the market to move towards the downside. If you go on to your monthly time frame, you'll see that there's way more space on the downside that the market can still decline to. So having this small view when it comes to trading the market on a day-to-day basis can actually distort the entire picture. So what you want to do is you want to drop down from your higher time frame through to your lower time frames whenever you're about to make a trading decision. Okay. So when you're trying to make a trading decision of whether to go long or to go short or just to stay out, because that's also a trading decision, the decision to stay out of the market is a very wise decision that you can actually make, and you need to decide, you need to know when you should be trading and when you shouldn't be trading. So in this example then, on this daily, now the picture, the mindset that we've been, that the market has been in a downward trend and we're expecting it to reverse, has changed, because we've seen on the weekly time frame that there's still room on the downside that the market can move toward. All right. Guys, get me? All right. So if everything is, let's say, coming together, you want to have the moving averages in line. Now, generally, the moving averages in a downward trend will be just above the actual market price. Okay. And in an upward trend, moving averages will be just below the market price. Okay. All right, you guys are with me. All right, so now one, you can look at swing highs, swing lows, and two, you can look at moving averages. Okay, so those are the two nifty tools that you can use to decide and discern whether you are in a bearish or a bullish market. Okay. Now, let's just drop down to that 4 hour time frame. Okay, now looking at the 4 hour time frame, I know a lot of guys have taken this in the WhatsApp group, and obviously a lot of people are excited about the actual trade setup and all of that stuff. Now, if you have to understand a lot of different methodologies are being applied, especially within the group, and a lot of different eyes and styles of trading. So we might even trade the same strategy and come out with 2 or 3 different analyses, basically. So what you try to do then is you're trying to separate yourself by making sure that you stay in line with the major trend. So as I was saying, the number one rule that I basically follow and I suggest you take a look at is always trade in line with the trend. So that means generally you want to be short in the long term, because I've been saying I'm short, I don't know for how many months now, on the Euro USD, and I will remain short on the Euro USD. Okay, I did mention parity, which is $1 for €1. I've been looking at that mark, right? But you see there's some nice significant levels here at 104, right? So there's some nice levels that you can actually see, and there is a huge possibility that the market will be drawn towards those levels, because aside from this swing low that was over here, there's not really all that much that's actually going to be able to hold the price, right? But obviously it is anyone's guess. Okay, we are dealing with probability, and what we are trying to do is make sure that the probabilities are on our side for us, or for the actual trade setup to go the way that we want it to, right? So the first step would just be looking at the swing highs and looking at the swing lows, right? So you can see the swing high here, there's a swing high, and there's another swing high, and the swing highs are not being broken, right? So that's the most critical, and it might sound basic and simple right now, but it is something that a lot of people really do neglect. So you see these swing highs, right, where the market was going up, it seemed like it was going up, and then reversed, and then continued in the opposite direction, right? So in this instance, it's continuing the move to the downside. So, and the lows, these swing lows are being broken, meaning that there is a low that goes below the preceding low. Okay, so the market or the market price goes below the preceding low, and you can see on the upside, the price doesn't go above that preceding high. So it actually, in a sense, is making lower highs. Right. So what we are trying to do then is to find those opportunities where the market is just basically retracing and giving us an opportunity to just go in with a short, right? Go in with a mini contract, standard, 5 standards, 10 lots, doesn't really matter, as long as obviously your account can take it. Then you are essentially trading in line with where the major trend is. Right? So it puts the laws of probability on your side if you're trying to do that. Because if you do notice, right, I'm not sure if you guys have ever noticed that a lot of people will try the opposite thing. They will try to trade against the trend. I think I did see something, all right, I'll show you guys a bit later on, about someone posting like a GBP buy. I'm not sure if it was GBP AUD. Now, obviously, there's nothing wrong with that. Okay. However, predominantly, especially if you're at the beginning stages, or you're just sort of like trying to find your feet, definitely what you want to be doing is trading in line with the major trend, because that's where you're going to get more bang for your buck, as opposed to trying to scrap up 10 pips here, 20 pips here, trying to buy against the major trend. If you're going with the trend, then you're definitely going to be getting those nice meaty moves. You don't have to get the whole entire move, which is what I always say. If you're trying to trade in line with the trend, you will definitely be missing the tops, and you will definitely be missing out on the bottoms. Okay, so that means this part over here. Okay, this part over here, you're going to be missing out on. So you might have probably started going short on this market somewhere around here. Okay, because there you have a swing low, right? A significant swing low, and the market retested that swing low, and it was eventually broken, and the market came back to retest and then pulled away to the downside. Okay, so only I think around November 2018, you would have had an opportunity then to say, right, this market is in a downward spiral. Okay, that's just by looking at the daily time frame, because once you start doing your analysis properly, you will be able to first go from the higher time frames and then to the lower time frames. You don't want to go from the smaller time frames to the higher time frames, because trust me, that can be a bit confusing, because of lower time frames will show you that okay, this is certainly going down, and then once you go through to your higher time frames, it sort of like twists your mind because now it looks like it's going the opposite direction. So what you want to do is save yourself some time, start off with the higher time frame, daily ideally, and 4 hour, and then you can go on through to your 1 hour as well. Okay. Right. Are there any questions so far though? Okay, guys, are awfully quiet. Okay, let me clear this thing. All right, so now there are ways for us to be able to discern or decide whether the market is in a downward trend or an upward trend earlier. So if you looked at the example that I gave just previously of that break below that previous support structure, and you felt like, I mean, you don't want to get in that late, right? That is, though, the most the safer place to get into a trade. However, if you can't wait for that, if you want to be in on the action a bit earlier, you can then use the lower time frames. Okay, so if you're using the lower time frame, you can drop down to your 4 hour, for example. Okay, now you can see that the 4 hour would have had you, let's say if you're just looking at the moving averages crossing, right? Because the signal of the 200 as well as the 800 EMA crossing to the downside can signify to us that we are about to go the opposite direction. So in this instance, you would have had entry somewhere around there. Okay, so that's where you would have gotten your entry. And on the daily, I think I missed that. Okay, let me just do this. I think it's somewhere around here where you got your sell, rather somewhere around here, as opposed to this where you had to wait for the actual retest. Okay, now what we want to do, we want to be trading the more safer approach. So if you want to be more consistent, get more pips, because if this does move down, so the breakout was here, the retest was here. So if this does move down to 1047, you still get 1000 pips worth of move. Okay, you probably missed out on, let's say, 500 pips, but you actually got to bank 1000 pips. Okay. Now, this is what I usually say this, and I will continue to preach this particular gospel, that you will not catch the market at the top and you will not get out at the bottom. Right? You don't know where the bottom is. We don't know where the top is. Now, one of the most common areas that we could be potentially making when it comes to react to sort of like getting an idea where the overall trend is by looking at oscillators. Okay, now if you understand how to use oscillators, then perfect, great. But oscillators can't be a crutch. It can't be something that you lean on in order for you to make money. It's something that you're going to be using in conjunction with the knowledge as well as the skill that you already have. Because oscillators are lagging indicators. What they do, they show you what's already happened, and therefore they're based on candle closes, right? RSI is based on the candle close, so it can show you where the market has been, right? It shows just where the market has been. It doesn't literally show you where the market is going, so it's impossible for it to do so. Now, the common mistake is that once you get these overbought or oversold signals, okay, overbought or oversold simply means that the market is at one of these extremes. So in this case, just above 70 or just below 30, those are the extremes, the market extremes. So as soon as the market goes above this high, then the person will start feeling like that the market is overbought, right? So way too many people have bought it. and therefore it should go to the downside. But when you really start to test this hypothesis out, okay, you can see there you had an overbought signal. The market said you may short it because it's going to go down, right? However, the market extended another 200 pips. Get me? Right. As well, here you had a buy signal coming out, and the market extended to the downside another 265 pips. All right. Now this is all trying to trade against the actual trend. Here as well, obviously, this would have paid out quite decently, 200 pips, but it's not a 1,000 pip move. Okay, so you can go back by yourself and do a lot of these sort of like tests and see where oscillators would have given you a signal to actually go buy or to go sell against the trend. Okay, because immediately after that, a big move in the opposite direction usually follows. Okay, because if you're looking at the short side, for example, the moves or the aggressiveness of the moves are much more bigger. This is 372 pips. Okay, this is 300 pips. This is almost 300 pips, right? And the moves to the upside are usually very small, very marginal, like 130 pips, 100 pips, 110 pips, 50 pips. Sometimes they give you like 5 or 7 pips, and then the market trend reverses on you. So what you want to do from the get-go, from the beginning, is to start with your higher time frames, right? Get a sense and feel of what the market is doing on the higher time frames before closing down to your lower time frames. I promise you, looking at 9 markets or 10 markets, I should do analysis in less than 10 minutes. Okay, it's not that I'm scaled or anything of the sort. It's just when you continuously do something, it becomes much easier. Okay, the more you do something, the easier it becomes. It's sort of like a bad habit as well. But if you're not supposed to be drinking, or let's say you're on a diet and you have a bar of chocolate, the second time it becomes easier. The third time it becomes easier until obviously you're stuck in a rut and your diet isn't going anywhere. So it's the same thing when it comes to practicing or doing something over and over again. Okay. All right, guys are good. Okay, do we have any questions though for tonight? Okay. All right, guys. So if there are no questions for tonight, I'll have to end it off here. Okay, today is Wednesday. I'll send out the schedule for the beginners and the advanced classes, and then because I've decided just to separate those two. If you want to attend the advanced classes, you can do so, no problem at all. And if you just want to stick to the beginner stuff, just to sort of like get the feel of the market and what we're going to be doing and covering for the next few weeks, then you can definitely stick with me here with the beginners side. Okay. Right, guys. So it is 7:30, and tonight's session has come to a close. I will be uploading this video, and you can get the link. I'll post the link in the WhatsApp group so you can just check it out. Yeah. All right. Cheers, guys.